Hi friends, welcome back to the channel, and this is your daily news. So let's just jump right in the headlines here. Fed officials say rates may need to go higher to tame inflation. And then you look at the subtitles here. Governor Waller cites slow progress on core inflation. Richmond Fed Chief Barkin says he's comfortable doing more. And I've told you guys this several times. The Fed, when they come out and make public statements, it's all planned. It's not, like just random thoughts, anything like that. And it's kind of funny because their messaging is a little bit funky. To where they're pausing yet saying they want to raise more. And the question is, well, if you're saying that, why not just do it now? I think that's a reasonable thing. So the market is a bit in limbo right now. It's like, well, do we, go with what the Fed does, or do we go with what the Fed says? Because it's slightly different things. Now, if you take a look at how the market responded today, which is Friday, S&P 500 breaks 6-day win streak on Friday, but still not his best week since March. And I have really just an important message for you in this particular video is that, understand that the financial industry is largely hype, it's largely marketing, and they want to sell you something. So as long as you understand that it's a game and they're in it for themselves to make money, you're going to do fine, right? As long as you understand that. Don't think that these people care about you, because I want to show you some headlines and sort of like how our industry works. The last couple of days, see, this is on June 4th, it says, ARK Invest, these two AI stocks are being overlooked by the market, right? So all the hype right now, I'm sure you guys know, is all about like, what's the best AI thing, is how AI is going to change the world. And you got to, buy AI, right? So this is a couple days ago too. Morgan Stanley loves these 5 global AI chip stocks that could take Nvidia's market share, right? It's all about AI, and you're chasing the returns of Nvidia, which has been fantastic, 100%. If you got Nvidia to be in the year, I think that's probably been the best big stock in the market. And that's essentially how, retail thinks about this. And this is from CNBC, essentially, is everyone wants to chase. That is, whatever's the hot thing. But understand that this is a game, and Wall Street's all, pumping into the game. Here's more. Goldman Sachs. These are top stocks to play the AI theme. Goldman tells clients, right? Because essentially people start calling up their investor like, oh, I heard about this AI thing on CNBC, and I really want to, jump in on it. Which one do you recommend? Like, that's how this game is played, right? And then the analysts and the investment advisors, et cetera, they'll have to come up with some things that people can do so they sound smart, even though they all know it's bogus. But again, this is a game, and they're in it to make money for themselves, right? Another one, Bank of America ranks the biggest AI winners in software stocks. Here are its top picks, right? So you guys get the gist of it. One of the things that is really interesting is some countries, right? So the USA, they do a much better job of making it seem more legitimate, that it's not a game. Whereas in places that are developing, say Indonesia, it's harder to mask the manipulation and gamification of the financial industry. You can read the headlines here: mysterious 1,000% stock gains baffle traders in Indonesia. And if you read the details of this thing, so I guess there were like 83 Indonesian companies. This is the last 3 years, and they've all gone up like 1,000%, which is pretty crazy for a 3-year return. And if you read the details, it's really funny. I'll read to you guys here. It says, while wild stock swings for illiquid shares are nothing new in emerging markets, the moves have become so extreme in Indonesia that regulators on Monday introduced a new watch list board to quickly spot what they perceive as troubled companies as a way to protect investors, right? The issue is always the same, is, the governments or whatever regulators will turn a blind eye when things are okay. But if like suddenly one of their rich friends starts losing money, they call up their, rich buddies in government, et cetera, and say, hey, why did you let me get scammed? And then they got to start, controlling it. And you can see here, this is sort of the issue again, this is Indonesia. The list will include firms with no revenue growth, low share prices, thin liquidity, and undergoing debt reconstruction, and among other factors. And then some traders are pushing for more authorities to even do more. And you're worried about market manipulation. So I'm making the case that, so all of this AI pumping stuff is market manipulation, but it's in a different way. It's with your big companies and your Wall Street, and it's all essentially like, we can all see it, like where it's all in plain sight. Whereas this other stuff, more Indonesia, is a little bit more secretive. Yes, you can see the movement of the stocks, but it's a different way. And I'll give you an example. Here's a prime example, is the SoFi thing. And if you guys haven't watched the SoFi stock, it's been doing absolutely fantastic, as long as you understand that this is a game. So on June 12th, right, just a few days ago, Truist Securities analysts upgrades SoFi, technologies with bullish price target. Like, oh my God, buy SoFi, jump right in. You got to get it. This is on June 12th, right? And then you just go like a couple days later, June 16th, SoFi stock gets downgraded. Analysts say it's come too far, too fast, and it was down like 10% today, something like that. But it's kind of ridiculous. It gets an upgrade, last week, and then goes up like, I think it went up like some stupid number, like 40%. And it's not stupid if you're making 40% of your money. I mean, that's not stupid. But just understand that this is a game, right? What's stupid is that you don't realize it's a game, and then you keep buying more at the top, and you're not, trimming in to control your risk, because then now it gets downgraded, right? So this is the part of the manipulation thing. Here's more. I'll give you guys an idea. And I just want to understand, like, again, this is all in plain sight. And I just want you to understand and recognize what's happening. So look at the headlines here. Elon Musk says Tesla's market cap is directly tied to whether it solves autonomous driving. And this has been part of the whole Tesla, thing for years. Of like, bro, we're going to have full FSD, right? Full self-driving cars, and you can just lay back in your car, and the thing will drive around itself. And moreover, as Musk has promised, this was back in 2019. Back then, he said that we're going to have 1 million robo-taxis on the roads next year, and that would have been 2020. So what, like 3 years ago? So 4 years ago, he said it, and then, it was supposed to happen 3 years ago that everyone's going to have essentially. It's kind of funny to think about this. I was thinking like the whole robo-taxi thing is kind of like promising you're going to get rich on Airbnb. Basically the idea is that, you're going to buy a house and rent it out, and it's just going to be awesome passive income. The same way that, oh my God, you're going to buy a Tesla and you're going to have passive income from robo-taxis. And it's all hype. And, he even admits it that, like, the crazy stock price of Tesla is based on whether or not autonomous driving works. And they've been saying it's coming for years now. And obviously it hasn't come. And I get it. There are people out there who, believe in the hype. They're willing to pay $12,000 a year to be a beta tester, essentially. And it is what it is. So just, yes, you can make money. 100% you can make money on this stuff, but just understand it's a game. That's kind of the message I want you guys to get here. Here's another headline, which is a really interesting one. 7 companies driving the U.S. stock rally, right? This is the last, a few months here. You can see this is really interesting. They're talking about Apple. And this is where our market's a bit funky, because just a few big companies are just dominating right now. So Apple's actually worth more than all of the UK's top 100 companies listed together. Isn't that crazy? And Apple's worth more than the Russell 2000. And you can take a look at this, and this is sort of where it feels very, very bubbly or frothy, or whatever the word you want to use. So this is your forward PE ratio. So if you don't know what that means, it's basically the price of stocks compared to how much the company earns is the ratio there. And the gist of it is the S&P 500, right? Without the big 7 ones. And what was the big 7 here? You can see it's Google, Nvidia, Microsoft, Amazon, Tesla, Meta, and Apple. So without those in the S&P 500, forward PEs are, like 17, something like that. So reasonable. And then you compare that to, say, the big 7 is what they're calling this article. These are like at 32. So basically double. So you're implying then that these, biggest companies here are going to have double the growth, double the profits, and double of everything compared to everyone else in the market, which is kind of crazy. It depends if you want to believe in the, the AI hype or not, right? If you want to believe the ARK Invest AI hype thing that is going to change everything, and everyone's going to make a ton of money off AI. I laugh because, it should be obvious. It's a bubble. Now, it doesn't mean these companies don't make money. They do. It's just the problem is, like, valuation. And the way that I always explain to make it really simple is, you may love your house. Like, for example, you may love your house, but would you want to pay 4x the price of what you paid for? And the answer should be obvious. No, right? There is a certain inherent value of your house, and overpaying is not great. And, one of the things that's been going on is just this Nvidia hype, this AI thing. And so that's why you see these headlines that everyone's chasing it. And it's interesting because I'll make out videos, calling out people on YouTube every now and then. But the sad thing is most people, frankly, just be honest, don't understand my videos. And I'll give you a simple example. So here, this was a video I did 7 months ago about the Larry Jones, Keenan, Stockman guy. And they run a scam. The basic scam that they run is they say, look at Apple stock. Apple stock was a penny stock, which is a lie. It's just a blatant lie. Apple stock was never a penny stock. So they'll tell you Apple was a penny stock. And then therefore, if that, case is true, which is a lie, then you should buy, this penny stock they recommend. And they recommend, penny stock after penny stock after penny stock, right? It's all a scam. And you actually will read comments of their followers. So this is from 40 minutes ago. And again, this is a 7-month-old video, but I see these from time to time. And this is their comment. I want you to understand sort of like what's going on here. So according to King of Many 21, It's a scam. You take advice from people on the internet blindly. You scammed yourself same way you're blaming these individuals, blindly stating facts. And again, he doesn't even understand my video, which is the whole purpose of like, the scam is that they're basically saying Apple is a penny stock and therefore you should buy all these other penny stocks and it'll all, 1,000x. And this also represents, and again, it's a scam. This all represents also too who the sort of average viewer on YouTube is. So this is the King of Minute 21. He says here that he's a rap and hip hop artist and a producer of the official gaming channel, and he plays video games and puts video game content on there. And I just want you to understand, this is your average audience, and this is sort of the people that these predators on YouTube target, and it's sad. And so I try to put out these videos time to time about, just understand that this is happening, but do realize that the sort of predatorial thing of the financial industry is not just on YouTube, it's also on Wall Street itself. So it's everywhere. One of the things I want to point out to you guys, and I do this over and over again for those of you who aren't old enough, because you may or not know, I'm 48, I'm pushing 50, and I remember these things. I remember the dot-com bubble. So this was Intel. It's a legitimate company. They make money. It was the hypest company back in, say, 2000. Actually, the hypest you could say would be pets.com, but that doesn't even exist anymore. So, you would, if you're not old enough, you wouldn't even know about that kind of thing. But, Intel, if you bought at the top back in 2000, you're actually down. It never reached back up there again. So, again, this is a legitimate company. They make money. They were important, but you can overpay for a stock. That is a real thing. So some people, the way that they push Tesla, they're just like, oh, it's still early. The company's still in its early stages. And it's like, what are you talking about? Like how, I'm trying to be nice, but it would be mean. Like how dumb could you possibly be to think that, Tesla's a startup at this point, right? That it's in the early stages. It's like so ludicrous. And it's the same kind of notion though, is that in order to keep the hype machine going, you just have to basically say, oh, you're getting in early, buy now, even though, a stock has gone up, a bazillion percent. You guys see what I'm saying? So it's ridiculous. And, part of the sort of the marketing machine of Wall Street or in the finance industry and on YouTube is when it's hot, you got all these people have jobs and opportunities and they're just pushing you stuff. But the parties, it starts to slow down, right? Because the money quits flowing. You can see here, Wall Street bank jobs cut, set to surprise 11,000 as CEOs unwind hiring ban. So I guess 11,000 more people are going to get fired. And essentially, this is really interesting. There could be a big sort of layoffs in the financial industry that already has been happening. We've been reporting that for a while. But I was looking at these levels here. So this is in New York, and this is securities industry, and this was an interesting chart that they put up, like say, before the dot-com bubble, or sorry, not.com, so the 0809 crisis. You can see here, there's a bunch of people that had jobs, and everyone lost their jobs, like basically the crash of the financial crisis. And we're kind of at those levels again of like high levels of staffing. So there certainly could be more downside ahead. And the reason why I'm bringing up the Wall Street, and I mentioned it before, say on YouTube, they basically are predatorial against the lower end of the economic spectrum, whereas on Wall Street, right, you can see Kardashians or Floyd Smithers, these kind of stuff, like they deal with these kind of people and are pumping whatever crypto and those kind of scams. So the scams work at all levels of society. And so on this channel, I try my best to give you guys, yes, we do talk about markets, but also just give you general news so you understand sort of what's going on, because I don't want to just be hype machine all day, every day. The truth of the matter is though, and this is just the reality, and it's a sad reality, if you want to be popular on YouTube or even popular on Wall Street, just tell everyone they're going to be rich and just buy into the hype, and you can do that. And for me, I just feel uncomfortable, doing those kind of things. So that's just me, but it is what it is. This is sort of what the news, though, what I think is really interesting news today. I guess UPS is looking to go on a strike. So if there's anyone in the community that, works for UPS or has family members that do, I'd love to hear what's going on with that. And they're saying as soon as August 1st. Because just from the regular person's perspective, and I was just in USA for a couple of weeks, and I was just like, oh my God, things are just so expensive. And the question I always ask for you guys, have your wages caught up or been, the same growth rate as say your mortgage or your rents or your food costs, which I think are something that you see daily. And we talked about before on this channel when someone says, TV costs have gone down, say 20% for last year. So yes, as a whole, inflation has gone down in terms of like, because they include something like a TV cost. But on a daily basis, I don't buy TVs where it feels like food costs are still elevated, et cetera. And so then workers clearly then want to get paid more to pay for their expenses, food and housing. And it's interesting too, because another one that UPS was also asking for, the drivers that is Airconditioned Trucks. And So my understanding is funny because I've noticed for a while, I think a lot of these, and you guys have to, share your thoughts. So I think it's FedEx and UPS that if they drive around on those trucks and they're kind of like, what word to say it, there's no door. They're always open. And I've never driven one of these things. So I don't know if like every truck is designed that way, et cetera. Cause it would seem like really, really cool if you're like in a state where, it's winter, or they just drive around with their door open all the time because it's just easier to get in and out. So I'll be curious now, but evidently, I guess some of these trucks are not air conditioned. And then, if you're in parts of the country where it feels like temperatures, or not just feels like it is, that temperatures have been going up the last few years, that's certainly something that you're concerned of. It's certainly for just comfort and also too for your safety. Regarding working conditions as well, this is another big headline. It was all over the news the last couple of days. So one is that the Chinese economy recovery is slowing. But the big number that was thrown out there was the jobless rates. This is for Chinese people 16 and 24. I guess jobless rate is 20.8%. I can tell you here in Korea, it's the same. The youth unemployment is really high. And this just sort of represents like, if young people can't get jobs in, say, be it factories or even retail jobs, or, just sort of jobs that young people take, it just shows a slowing down of everything, which is something that is a bit of a warning sign. And one thing that I was thinking about too, and we're talking China, but it could be happening in the US also, is that when things do slow down, people lose their jobs, say at the high end at places like on Wall Street or whatever, there's going to be more scammy people out there saying, hey, this is the next greatest thing, and all you got to do is, this is real, get a whole bunch of credit cards and you're going to be golden. So if you haven't seen this video yet, please check it out. I did a video on Grandma Steph, and he's running a credit card scams thing. And I'm serious, just watch the video for yourself and make up your own mind. But do be careful out there. And so I hope you understand the primary message of this thing is yes, you can make money in this stuff, but just understand it's a game. And the way that you protect yourself is just don't throw all your eggs in one basket, because at any moment, the game can change, right? And so the best things that I always say for you guys is take the sure things first, like the sure things first, right? Be it, for example, get a job that pays you more money, which is a sure thing. That's a great way to increase your wealth. Another sure thing is take your bonds, take your cash and put it in savings accounts, get that, whatever, 4% right now. And yes, you can do stocks, and yes, you can totally make money. If you've been in Nvidia, you've done fantastic, but understand that it's a game. That's really important. So I do appreciate your time, everyone. Love to hear your thoughts on any one of these topics, and I'll catch you in the next video.